Global gold prices fell in Thursday's trading session, November 13th, slipping from a 3-week high, as U.S. financial markets experienced a broad sell-off after the government reopened. The SPDR Gold Trust Fund bought a net of more than 2 tons, heading toward completing a week with more purchases than sales. At the close, spot gold in New York fell $24 per ounce, or 0.57%, to $4,170.30 per ounce, according to Kitco exchange data. During the session, spot gold briefly reached $4,245 per ounce, the highest level since October 21st, but at times dropped more than 1% to around $4,150 per ounce, representing a nearly $100 per ounce trading range. December gold futures on COMEX fell 0.5%, closing at $4,194.50 per ounce. The U.S. government reopened after a 43-day partial shutdown, the longest in Washington's history. Normal operations resumed after both houses of Congress passed a temporary budget bill this week, funding federal agencies through January 30th, 2026. After being approved by the Senate earlier in the week, the bill was passed by the House on Wednesday evening, November 12th, and then signed into law by President Donald Trump a few hours later. Before this price decline, gold had risen steadily since the beginning of the week amid expectations of the government reopening. The market anticipated that with the government back to normal operations, delayed economic data would be released, indicating a weakening economy and thereby reinforcing the possibility that the Federal Reserve, Fed, might cut interest rates in December. Speaking to Reuters, independent precious metals trader Tai Wong in New York said, a broad sell-off occurred in the session, with stocks, bonds, the US dollar, and cryptocurrencies all in the red, and precious metals were not spared from the selling. According to Wong, recent trading sessions can be seen as a classic case of buy the rumor, sell the fact after the US government reopened. Kitco Metals analyst Jim Wyckoff noted that gold, silver, and other precious metals rose sharply at the start of the session due to expectations that the Fed would cut interest rates next month. However, as more Fed officials signaled the need for patience in rate cuts, citing high inflation concerns and confidence in a relatively stable labor market. Downward